Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look what is going on in the gold market. So yesterday we said that might be another setup with a possible bullish action, but we have warned you hopefully that be aware of any collapse. If we will see the collapse on intraday charts, ignore this opportunity, ignore this setup, because market could go lower. And well, in general, as we have talked about this many times already in the weekly reports and daily reports, the overall background on the gold market stands really weak, and it makes really tricky for trading any bullish stops, even if they look at the first glance reliable. So, for example, on the daily chart, we already said and taken an in-depth view on this chart in the weekly report, and we said that with the background that we have from the gold, for the common changing on the policy, on the interest on the central banks, this gold will be under pressure. And here we could identify kind of the bearish dynamic pressure, because you can see by the trend, the May city, it shows the bullish performance, because you could see that the market here is forming these lower lows and shows in general upward tendency, while on the chart we do not see it. Market forming lower lows, lower highs, and sorry, quite vice versa, lower lows, lower highs, and that might be some extended and some signs of the bearish dynamic pressure, which suggests that with the perspective of the few weeks we could get downward action on the gold market. Today, again, it will be a bit tricky session. Beyond the durable good orders that we'll get from the United States, today we will get the Bank of Canada meeting. And as you know, the crude oil stays on top, and the inflationary pressure is rising across the globe, and Canada here is not an exception. So any hints that Canada could stand ahead of the Fed with possible rate change, it's more aggressive speech from the Bank of Canada. It could make impact on the gold market today. It's because Canada could become among the first central banks who will come closer to the rate change. So we already do know that Bank of England, with a high probability, should change rate in November and probably in December as well. But Canada, Australia stands very close to this decision, but not quite yet. So the most lagging central bank is a European Central Bank. So Fed stands with the rate change somewhere in next year, but they start tapering in November as well. So as soon as this process will be triggered by any central bank, for example, this could be the Canada, the gold market will get the first hit as the money across the globe will become more expensive. As rate starts to rising. Besides, as we mentioned in the weekly report, the real interest rates also starts to rise, and this is very negative sign for the gold market as well. So it means that currently, guys, first of all, we do not see any bullish background here for possible taking long position, but also we should be careful with any bullish positions and bullish stops that we have on intraday charts. Probably it doesn't mean that we should ignore it, but be careful and control the overall price behavior with these patterns. So on the 4-time frame chart, if you remember previously, we said yesterday we were talked about this possible butterfly that could theoretically push price higher, especially on the background of the retracement on interest rates. So currently you could see that on interest rates actually nothing has changed, and this performance still stands supportive to the gold, but it's definitely not enough to trigger another upward action on the gold market. As a result, what we have from the 4-time frame chart. First of all, the bearish engulfing pattern that we talked about, it seems it's still valid, because market hasn't taken the top of this pattern. Yesterday, hopefully we have warned you that ignore the trade, then a collapse will start. And once we have said it, this market just dropped to the downside and taking out of these lows. As you can see, even the theoretical chance for the butterfly has been erased. Another bearish signs that we have here, this market hits the minor target COP, so 127 butterfly is completed, but also market wasn't able to reach the opposite border of the flag of this consolidation. Now we also have the divergence with the MACD. If this divergence works, market should take it out of this top, and this will happen if market will breaks it down the flag. In this case, nearest target will be somewhere around 1760, 1757 support. So that's the potential scenario that we could get on the for our time frame chart. So theoretically, if we calculate the extension of the engulfing pattern, so maybe XOP, right, so you can see that XOP also stands very close to the 1758. So simultaneously the XOP extension also might be somewhere in this area. While the OP will be slightly lower, so below because retracement, as you can see, was very high, and it stands very close to 1778. So that will be the OP target of this ABCD pattern. So these two levels that you need to keep an eye on, depending on what you're trading, how you're trading. So if you're trading on 50-minute chart, you probably could consider 1778. If you're trading on the 4 time frame chart, you could watch for this one, but be aware also that market could have some support around this level. So if you take in position, don't forget to move stops to the break even. So that's what we have on the 4 time frame chart. Finally, on the intraday charts, currently I will use the same 15-minute chart because it's simpler to show you what could happen here. So that was our yesterday session. As you can see, just collapse here has happened, while market hasn't quite reached yet the OP target of the ABCD pattern that we discussed recently. So this tells us that we should not take any position here. Currently, guys, actually, if you consider taking the short position, you need to get some bearish continuation pattern. Hopefully, maybe we will get this godly steeple to sell around 1798, 1799, and that probably could be considered for possible taking the short position. To complete the 1778 target of the engulfing pattern, market also could form the butterfly. In this case, it's just 127 extension stands precisely the OP based on this ABC top OP target. So market could complete the butterfly first and then show the retracement. So anyway, watch for the patterns that might form here and use them for possible position taking. So if we'll get the butterfly, then wait for some pullback after the OP will be reached. If we'll get godly steeple to sell, you could use it for consider taking the short position, if of course you have intention to sell the gold here in the current circumstances. And of course, keep an eye on coming statement from the Bank of Canada.